The changes to the VAT reverse charge rules for the construction sector have been in the pipeline for a long time now, and the government has pushed back the implementation date time and time again. But we're now running on the idea that it's all going to come into actual effect with effect from the 1st of March of this year. The changes that are coming in have an impact on many businesses who are involved in the construction industry, and such businesses need to know how the new rules work. We're delighted to have Bevan from Bevan VAT Consultancy with us today, and she will run through how the new rules and regulations will work. So over to you, Hilary.
Right, thank you very much, Alan. So hello everybody. Just as a caveat, as there always is with this sort of presentation, this is being recorded on the 12th of January. These are the rules as we understand them at the moment, but as you'll hear as we go through this, there have been a number of changes over the past few years as this topic has evolved. So if you are making a decision based on this, do check either with me or with whoever you normally deal with at Clive Owen, just to make sure that nothing's changed since then. So we've got an agenda here. We're going to go through a bit of background on why we need the rules and why they're coming in now, the conditions that need to be met for the rules to apply, and then we'll dig a bit deeper into what some of those conditions mean. I'll give you an example of how the VAT will be treated if the reverse charge rules do apply, some links to some further guidance from HMRC, and a to-do list so you can make sure that you're prepared and ready to go from the 1st of March. So the background, I don't know whether that will be fully legible because I don't know where the pictures, where the videos are, but just to read it out to you, the reason this came in, HMRC said, fraud in construction sector labour supply chains presents a significant risk to the Exchequer. Organised criminal gangs create contrived supply chains to enable them to perpetrate what is commonly referred to as missing trader fraud whilst operating alongside actual construction services. It is estimated that tackling it will raise an average of £100 million a year, which is a vast sum of money. So you can see why it was felt that something was needed. And I haven't included on the slide, but what HMRC also said was this is most commonly found among subcontractors who provide groups of workers to the construction sector. They have low VAT costs to recover because their main cost is wages, which are not subject to VAT, but they are required to charge VAT on the service of supplying their workers to other contractors. An incentive therefore arises to evade the high net VAT payable by going missing or committing other forms of fraud. So essentially what HMRC's concern was that a contractor in the construction industry would engage a subcontractor to do some work for them. That subcontractor would say charge them £100,000 plus £20,000 VAT. The contractor would pay the VAT to the subcontractor and claim it back from HMRC, and then the subcontractor would sail off into the sunset with that £20,000 without ever paying it over. So to combat that, the reverse charge, it might be a phrase that you're not familiar with yet, although those of you who've traded overseas might have come across it before. It essentially means the VAT is dealt with by the contractor, the customer instead. So instead of the contractor paying that £20,000 VAT to the subcontractor, they pay it direct to HMRC. And that's all it is, it's all it means. So you can see on this slide that the changes we've had in implementation dates. So originally, this was announced in 2017, which HMRC said gave plenty of lead-in time in order for it to come in from the 1st of October 2019 and for everybody to be prepared. And I think the idea was it was going to affect 150,000 businesses. So it's quite a lot of businesses that needed to get to grips with it and understand what they were doing. But the problem was, although we did have 2 years to prepare for it, there actually was very little in the way of guidance released. And even the actual legislation wasn't released until just a couple of months before it was due to come in. So there was no time to prepare. There wasn't enough publicity. Businesses weren't going to be ready. And so on the 6th of September 2019, only 3.5 weeks before it was due to come in, it was actually announced that it would be deferred a year to give people time to prepare and be ready for this to come in from the 1st of October 2020. So HMRC did step up the advertising campaign a little bit. All of the guidance has now been released. Businesses who will be affected should have received a letter from HMRC, although I don't think everybody did. There are webinars available regularly, which people could sign up to. But then, of course, COVID hit. And you'll see as we go through the slides later on, there's a potential cash flow implication of these reverse charge rules. And the concern was that these new rules would hit businesses who were already struggling with the implications of COVID and cash flow problems from that. And they didn't want to have this at the same time to compound those problems. So because of COVID, it's been deferred again to the 1st of March 2021, which obviously isn't very far away, which is why we're recording this webinar for you, so that you can be prepared and be ready for the 1st of March. Now, people obviously will ask the question, is it actually going to come in on the 1st of March? We've already had 2 deferrals. What's to stop it being deferred again? And obviously I don't have a crystal ball. All I can say is that HMRC are saying this will happen. It is coming in. And we'll just have to keep an eye on it. With a little bit of work, which we'll go through, and the things you need to address in your to-do list, you can be prepared for this and ready without too much effort on your part. So at least you're ready for when it does come in. And I think we've just got to approach it on the basis that that will be the 1st of March, even if we are still in lockdown or whatever point we're at by then. So the reverse charge only applies when all of these conditions are met. You must be providing specified services. You must be making a standard rated or reduced rated supply. We'll dig into those first 2 in a little bit shortly. The customer must be VAT registered. The customer must be CIS registered. And those are fairly easy. Just ask your customer. It's a yes or no answer. And the customer must be making an onward supply, which again, that's really the key point here that a lot turns on. So we'll dig into that in more details. So I am just going to share with you the flow chart. So this is what HMRC have included in their guidance, and this is a very good starting point for any business which thinks it might be caught by the reverse charge rules. So does the supply fall within the scope of CIS? So is it a specified service, which we'll dig into in more detail? If not, normal VAT rules apply. If yes, move on to question 2. Is the supply standard rated or reduced rated? And again, we'll go into that in a bit more detail. If not, normal VAT rules apply. If it does, we move on to the next question. Is your customer VAT registered? If the answer is no, normal VAT rules apply. If it's yes, move on to the next question. Is your customer registered for CIS? If the answer is no, normal VAT rules apply. So, for example, if you are doing some building work for a firm of accountants, you might answer yes to question 1, yes to question 2, yes to question 3. They're unlikely to be registered for CIS, so that would be a no, and it would fall down at that hurdle, and the normal VAT rules would apply and charge VAT in the normal way. If it's a yes, has your customer provided confirmation that it is an end user? If they have, if it's a yes, normal VAT rules apply. And if they haven't, the domestic reverse charge applies. So you'll see, actually, although it is a big deal and it is going to apply to a lot of transactions, there's actually a huge amount of transactions which will just fall within the normal VAT rules and won't be caught by it. you can see that these are conditions: specified services, standard rated or reduced rated supply, VAT registered customer, CIS registered customer, and the customer making an onward supply. So we'll move on to consider those in more detail. So specified services, I've lifted this directly from the HMRC guidance, which they took from the CIS guidance, although it has been adapted slightly. But if you're already familiar with the CIS regulations, most of this will seem fairly familiar to you. But you can see it does cover a wide range of work. You've got constructing buildings, repairing buildings, extending them, installing heating, which you might not think of as particularly big project building works, but that's covered. And painting or decorating buildings are also covered. So the starting point for any supply is to have a look and see if it falls within any of those descriptions on that page. And as I say, that's in the HMRC guidance, so you can always revisit it and check whether the work you're doing will be covered or the work you're buying. There is also in the guidance a list of what are not specified services. So there's some things that are specifically excluded from the rules. So you can see there, drilling for oil isn't covered. If you're manufacturing parts rather than actually putting them in a building as part of some building work, manufacturing components for heating, things like that, they're not covered. And also professional fees such as architects and surveyors and things like that, they're excluded. So again, your starting point, it should always be the VAT guidance, because the list there, and if there are any changes to those things, that is where the changes will be shown. So first point, look at those and see whether the work you're doing will be covered in that list. And I will just have a sip of water before we move on to the rate of VAT. So the reverse charge doesn't apply to zero rated supplies, which obviously makes sense. It's logical. If it's a zero rated supply, there's no VAT anyway, so there's no risk to the exchequer of that VAT going missing. So we don't need any specific rules for that. So that might be if you're involved in building a new house. That's usually zero rated, so that wouldn't be covered. It does apply to reduced rated supplies. So if you are laying flooring in a barn conversion, something like that would be covered. And it also applies to standard rated supplies. So if you are building a new office block, if you're decorating a shop, or if you're building an extension to a warehouse, something like that, those would all be covered. So you'll see quite quickly we've rattled through there the first two conditions. The specified services listed in the guidance, always check. Standard rated or reduced rated, the same rules as always would apply. There's no change to what is standard rated or reduced rated. Customer VAT registered, as I said, you just ask them if they are, and customer CIS registered. It would usually be an idea to ask for their registration numbers so that you do have some evidence on file that you have carried out that check. But there's not a lot you can do about it if you're given wrong information by your customer. So I've highlighted there in red the customer making an onward supply, and that's a very important thing, because I mentioned previously, if you're doing some work at an accountant's office, in that would already fall down at step 4 because the customer wouldn't be CIS registered. But actually, even if that was a builder's office and they were CIS registered, so you were doing some decorating which was standard rated for a VAT registered, CIS registered builder, if the customer isn't making an onward supply, so say it's for that building firm's head office and they're just utilising that building for their own purposes, not selling the supply on to someone else, it doesn't fall within the reverse charge. It's only if the customer is making an onward supply. So generally, if you're acting as a subcontractor to a main contractor. But this is the key bit that we really need to dig into. So the reverse charge does not apply, and you'll see there I've crossed out is end user and changed it to has notified the supplier that they are an end user. So that is a change that was announced, I think, let me just double check when it was, in June 2020. So initially, when the guidance was first written, the guidance said that the customer needed to notify the supplier they were an end user, but the legislation didn't. So we had a mismatch there. In June 2020, the guidance was updated and the legislation was also updated. So now the reverse charge only applies if the customer has notified the supplier they are an end user. So to be an end user, it's someone who does not make onward supplies of the building and construction services. So, as I say, it might be someone who is occupying a building for their own purposes, or it might be someone who is renting that building out, because then they're not making an onward supply of the construction services, they're making an onward supply of the building which has been constructed. If you see what I mean, it's a subtle difference, but there is a difference there. If the end user, if the customer tells the supplier they are the end user, there will be no reverse charge. If they don't, the reverse charge applies. And there's also special rules for intermediary suppliers who might be closely connected to the end user, and they can often be seen as the end user as well. And there's quite a lot in the guidance about that and about when that would apply. So yes, so as I say, the legislation about end user notification was updated in 2020. But the interesting thing is, of course, that gives the end user a choice. Before that legislation was updated, it was a fact. If the customer was the end user, charge VAT as normal. If the customer was not the end user, then you'd use the reverse charge. But now, yes, the customer can't choose whether they're the end user or not, but they can choose whether they make that notification to you and tell you. So if, as a supplier, you're notified they're the end user, normal VAT rules apply. If you are not notified they're the end user, or if you're notified that they're not the end user, then the reverse charge applies. So the customer could just decide not to bother notifying the supplier that they're the end user, and then the reverse charge rules will apply. So this is where it does get a bit tricky. So you do need to think about it carefully, because why would the customer do that? Now, if you think about it, when normal VAT rules apply, the customer has an obligation to pay the VAT to the supplier, and then the customer recovers the VAT from HMRC. So there may be a cash flow implication there, because they're paying the VAT up front before they recover it from HMRC. If they don't notify that they're the end user, the reverse charge will apply, which means there's no cash flow cost to them, because they would just deal with the input and output VAT on the same VAT return. So it does give the customer some scope. And then, of course, there's a negative cash flow implication for the supplier. So it's an interesting concept. Another reason they might choose not to notify, in a lot of circumstances, it's probably fairly easy to work out if you're the end user. As I say, if it's your head office and you occupy it, yes, it's quite easy. So you could confidently make that statement. If you have a building and you use one floor for your own offices, but then you're going to sell on some construction work on another floor to somebody else, and you're going to do something else with a different part of it, it might not be quite as easy to establish whether you're the end user. So a customer might choose not to make the statement because they don't want to make a mistake and get it wrong. The other reasons, it might be because it is a mixture and you don't want to have to worry about having half the contract under the reverse charge and half not under the reverse charge. So simpler not to make the notification. Also, if the customer has made a notification, the onus is then on them to tell the supplier if the position changes. So again, might be easier just to not notify. If you do decide to make a notification, or as the customer, that there isn't actually any specified wording under the law which has to be used. But what is suggested in the VAT guidance, and therefore obviously makes sense to use because HMRC are obviously happy with it. We are an end user for the purposes of Section 55A VAT Act 1994, reverse charge for building and construction services. Please issue us with a normal VAT invoice with VAT charged at the appropriate rate. We will not account for the reverse charge. So that makes sense. Easy statement. And there's actually also no requirement that that statement is made by a particular person. It doesn't have to be a director of the company. It doesn't have to be someone in the accounts department. All that you need to make sure is that it's someone who actually can factually make that statement and know that it is correct when they make it. So you need to make sure you have a copy of that on the file if you are accounting for that, and just tweak the wording slightly if they're making a notification that they're not the end user. You just adapt it to cover those circumstances. And what HMRC have suggested also is that some subcontractors might nearly always deal with end users or intermediary suppliers. They may very, very rarely work for people who would not be an end user. So you can include something in your terms and conditions that says, unless we are informed otherwise, we will assume you are an end user. And the issue is, of course, then, what if your customer doesn't read those terms and conditions properly and they're not an end user and they haven't told you? So although HMRC have suggested that, I think probably if you're changing terms and conditions and contracts to include something like that, it would be courteous just to mention that to your customers, that that's what you're doing, so they're aware. A couple of years down the line, it may well just be standard contract terms that nobody bats an eye at. But I think just while it's all new, it's just nice to be open with people and let them know what responsibility you are placing on them when they sign the agreement. So, to give an example of how it works, we've talked about the reverse charge and when it would apply. If it does apply, what is it? How does it work? So you can see here there's an example of a standard sale under the rules as they stand at the moment, pre-reverse charge. So the supplier makes a sale for £1,000 to the customer, charges them £200 VAT, so raises a gross invoice to the customer for £1,200. They receive that £1,200 from the customer, and then they have to pay £200 to HMRC, which leaves them with net income of £1,000. And this is where we talk about the cash flow issues. This is where it comes in, because quite often a construction business will receive that VAT from the customer quite some time before they have to pay it over to HMRC. So depending on the date of the invoice and the VAT return stagger periods, there could be 3 months where the supplier has the benefit of that £200 in their cash flow before it gets paid to HMRC. And you'll see on the next page how it works under reverse charge. But the position for the customer, they pay the supplier £1,200. They get £200 back from HMRC. So the cost to them is £1,000, which, as you'll see, the VAT obviously just goes round in a circle. So the supplier pays it to HMRC, HMRC pay it to the customer pays it to the supplier. So there's actually no VAT cost to anybody. There is a small cash flow cost to the customer, potentially, because they'll be paying that £200 VAT to the supplier before they get it back. Then if we look at how it works under the reverse charge rule, the supplier is making a sale again for £1,000. They do not charge any VAT on the invoice, so their gross invoice is the same as their net invoice, £1,000. They receive £1,000 to the customer, and their net income is £1,000. So the end result is exactly the same as it is pre-reverse charge, but they don't have that cash flow benefit of that £200 for up to 3 months till the VAT return is filed. From the customer's point of view, they have a net purchase of £1,000. They pay that £1,000 to the supplier. They pay £200 to HMRC, and they recover £200 from HMRC, assuming they can recover all of the VAT under the normal rules. But those £200, the output VAT and the input VAT, both go on the same VAT return. So there is actually no cash flow cost to them at all. It's a paper exercise, essentially. And the net cost to them at the end of the day is £1,000. So there's no difference in the end result. The difference is in making sure the position's right, making sure everybody understands who is declaring the VAT and when, and the cash flow implications. Here is an example invoice this is again from the HMRC guidance of how that supplier would show that. So all of the information at the top of the invoice would just be the same as it always has been. Got to have an invoice number and the date, show the customer details. So we've got refurbishment of commercial premises at 20% VAT. And in the VAT column, instead of adding VAT, it just says reverse charge applies. And the same for the conversion, that's at 5%, reverse charge applies. And you can see the statement at the bottom, customer to account to HMRC for the reverse charge output tax on the VAT exclusive price of items marked reverse charge at the relevant VAT rate as shown above. So you can see from that, it's still important that the supplier works out what that VAT rate is, whether it's 5% or 20%. You have to let the customer know how much VAT they are accounting for under the reverse charge rules, and how you work that out is the same as it's always been. There's no change to that. So we're back on the example. So hopefully that makes sense and you understand the potential issues, but you'll see, other than the cash flow implications, it shouldn't be too horrendous to actually get to grips with and be able to cope with. So what do you need to do to ensure that you're prepared? First thing, think about how you're going to get that information from your customer. There's a lot more information you need now that before it didn't matter at all whether your customer was VAT registered or not. You know, the VAT position was what it was and you just charged them VAT. But you need now, at the beginning of a contract, to find out if your customer is VAT registered, if they are CIS registered, if they are an end user, or if they're going to make a declaration about being an end user. So you need to have a think, who is going to be responsible for obtaining that information? Is it going to be the salesperson who's discussing it with the customer? Is it going to be part of your standard processes? Is it going to be written into your contracts? So you need to have a think about that, and where are you going to keep it? Obviously there's data protection rules to think about, and so you think about how you're going to store the data and everything like that. Have a think about your accounting systems, whether they need to be updated. Obviously most people are using cloud-based accounting systems now, so they're generally very good at updating things as they happen. But if you have a desktop system, you might need to download an update. From the supplier's point of view, it's probably fairly easy because you're just including the sale in box 6 and no VAT to declare. Although you will have to think about how to get that statement on your invoice about the reverse charge. From the customer's point of view, you need to think about how you're going to get that VAT to show in boxes 1 and box 4. but as I say, the software providers generally are on the ball and are updating these things as they go. Have a think about the cash flow implications. If you are a subcontractor and you've relied on that VAT coming in from your customer before paying it to HMRC, would it be worth switching to monthly VAT returns instead of quarterly? Because if almost all your sales are under the reverse charge, you won't actually have any sales VAT to pay to HMRC. So you'll generally be in a refund position with the VAT on your purchases due back to you. So if you switch to monthly returns, at least that speeds up, makes those repayments more regular. So it could help mitigate the impact. Make sure relevant staff are aware of the changes. So yeah, it's fine for the account staff to know, but if they're not the ones who are negotiating a contract with the customer or the supplier, depending which side of the transaction you're on, then it's no use. You need everybody who's going to be involved in that transaction to know, even if they don't necessarily know all the nitty gritty, just to know that there is a potential change there that needs to be flagged up. If you are a subcontractor and you use the flat rate scheme, have a think whether this is still beneficial. I've crunched a few numbers using different examples, and I haven't yet found one where the flat rate scheme is still beneficial. I suppose if you had very few transactions that were subject to the reverse charge, it might still be beneficial. But for businesses where a lot of the work would be under the reverse charge, it is still included in the flat rate scheme total. So might be beneficial to leave the flat rate scheme with effect from the 1st of March. And the last thing on that list, have a think if you've got any projects that are going to span the 1st of March, because of course the nature of construction contracts, they're not something that's necessarily over and done with in a few hours or a day. You may well have contracts which have been agreed before the rules come in, and there might be some even that were drafted and agreed before the changes about the customer notification came in June 2020. So the contracts might not actually take account of this. So it's worth reviewing them. There are some transitional rules, which I won't go into detail now, but if you do have a contract that spans the 1st of March, definitely have a look at it, have a chat with the customer or the supplier, depending which side you're on, and just make sure that everybody's happy with who's responsible for what. Because what we want to avoid is the supplier charging VAT when they shouldn't, because then technically that's not recoverable by the customer. But we also don't want to avoid nobody accounting for VAT, because the supplier thinks that it's reverse charge and the customer thinks that the supplier is dealing with it, and it falls through the cracks. So just want to make sure that you're on top of it and you're prepared. Hopefully now you've heard this, you will be prepared. And oops, wrong button. Some further reading there. I've just put some links. There's actually quite good for all that we had the issues of this being deferred initially because of the lack of guidance from HMRC. There is actually quite a lot of guidance there now, and I would certainly recommend that as your first step if you're likely to be affected either as a buyer or seller. There's some general guidance on building and construction services. There's the reverse charge if you buy building and construction services, reverse charge if you sell building and construction services, and then there's some more technical guidance as well that you can dig into that gives you a lot of the background and gives you some examples as well as to how things work. So those 4 documents, and also of course they are updated with any changes, so that they should always be the most up-to-date thing for you to look at if you're wondering whether anything's changed. And that is everything that I wanted to say. So my contact details are on that last slide there, and if you've got any questions, either have a chat with me or with whoever it is at Clive Owen who you normally deal with, and they should be able to to help you get to the bottom of it, so that you're prepared and you know what you're doing from the 1st of March. So thank you very much.